Hey everyone, how's it going? Since you have clicked on this video of mine, you probably saw the title, and chances are you also probably have a significant interest in Mullen Automotive stocks. Now, you have discovered that there was an interest in Mullen, the company, at some point, either from short-term speculation, YouTubers, the potential for short squeeze, or so on. We may all have believed that David Mitchery at some point will become like the double ganger for Elon Musk or the next big thing in the industry, right? At some point, we all had that something in the back of our head. Was it reasonable? Was it rational? Does it matter? Because in the end, we're all participating in a market that's mostly, till this day, based on speculation and positive assumption of the future. Since then, we're all wondering what's going to happen with this company and where will things go next. So I'm going to talk about what Mullen is, like, really should be, both as a company and as a position, where things stand now, and what should you do depending on your individual situation. Of course, we're also going to take a look at the technicals, but in the light of what recently happened, I will also talk about Mullen as a position in terms of like what kind of mentality should you be having. By the way, if you like what I do, please consider to like, comment, and subscribe, and to use the services down in the description via my affiliate links. Each purchase may yield me some additional income at no additional cost for you. With that being said, let's get into today's topic. So over the past few weeks, we have seen Mullen stock price dipping significantly. My God, has it dipped, right? Forcing the company to go through almost two reverse splits back to back. And this time, Mullen is going for 1-for-100, meaning they want to reduce Mullen shares by 100 times in order to prop up the individual share price so that they can continue to stay in the NASDAQ. Whatever that means, whatever, anyway. Whatever the cost, as long as they can stay in the open market so that they can raise more capital for later. That's what the gist is. So at this point, Mullen is purely playing with numbers in order to stay enlisted on NASDAQ so that when opportunities really present themselves, they may be able to raise funds with more ease. It also means that Mullen probably has little to no credibility left with actual investors regarding anything that has to do with their timeline or production amount, right? I hope that at this point, nobody has any sort of, how can I put this, illusion regarding the fact that we will be making money with their actual operations. Fortunately, not that many people were thinking about this to begin with. So there's that. This brings us to the other aspect of Mullen as a trading position. At the end of the day, Mullen is a position that many picked up as a stock with potential volatilities that may trigger massive gains or losses. It provided gains for some time, and now it is going the other way around. It does mean that Mullen should remain as a sideline position with minimal impact to your portfolio. That is for sure, and should have been true since day one. Of course, not everyone on YouTube or online has said this, right? A lot of people were talking about the potential promises or the potential gains that you can make with such a company. Does it mean that you're going to be making banks every single time that somebody says this? Of course not. Going back to my own videos, and by the way, I'm not bragging about myself. I know that I'm a very small channel, so regardless of what I say, the reach is very limited. Okay, but going back to what I've talked about, like since day one, I think I've always mentioned that the exposure should remain around 1%, or at least to a level that it's not going to hurt you. Because this is one of those positions that may unfortunately come back and bite us. That's for sure. Now, let's also take a look at the technical aspect of Mullen. On Friday's trading session, Mullen stock actually decreased by 13% compared to the previous close and closed the session at around 23 cents. This confirms to us that Mullen has not recovered its footing after all and continues to be driven down by the market. Recently, the company issued a letter trying to firefight the shareholder base, which really reached a boiling point, understandably so, with the traders feeling not very pleased with the recent stock performance, but also feeling betrayed by the company's lack of transparency. The letter didn't say anything beyond the company's opinion that everything's still doing great, that the shares are trading way below their book value, which, by the way, doesn't mean much, because it doesn't really matter how much those shares are booked in the books. It really matters of how the market wants to price those equities at. And at this point, there may be a possibility that Mullen will eventually reach something like $20. But this is mostly because the mechanical effect of a potential reverse split, especially when you reduce the number of shares by 100 times. Does it really mean that Mullen will eventually be trading de facto at $20 without those reverse splits? No, not really. Right, unfortunately, I don't think that we will reach that kind of step for a foreseeable future. Now, let's also take a look at the other technicals. The trading volume of Mullen recently reached around 400 million shares, compared to a typical average of 80 million shares. The 52-week period highs and lows are 20 cents and $42.75. The volume of trades tells us how many shares are being bought and sold at any time, and if there's enough liquidity to support any sort of trading strategy. The market cap of Mullen is currently around $74 million, with the enterprise value around 50. Now, the current price is just slightly higher than its historical lows. So, in my opinion, we will still be making new lows as the week will begin trading. The put-call volume ratio is currently 0.3, and in this case, I would say that most people are expecting the stock to eventually just jump back up, just because at some point the shorts will have to recover their positions, or simply that things are not going to stay like this forever. And if you look at like the whole thing from a mathematical or statistical perspective, yes, it does make sense. I mean, seriously, who's going to keep pushing the stock down when it's already so low? Because we have to remember the 23 cents has to be divided by, I think, 25. That's the last time they went through a reverse stock split. So, right, they're trading like literally at 1 penny. And under normal circumstances, they would have already been delisted from NASDAQ and trading at the OTC pink sheet market. Anyway, so they have avoided this so far, and let's see for how long they can delay the unavoidable. Regarding the shareholder structure, institutional owners hold about 150% of the current float, but this is, in my opinion, either a presentation glitch or because of the short selling, because somebody has to own them. The biggest shareholders include Vanguard, BlackRock, and iShares. So, of course, it's usually good to see some institutional participation, but in the case of Mullen, I don't believe that it matters that much. It is objectively a position that is fit for trading and speculation, not really for the long-term holding, because I'm not sure how long that long-term will necessarily be. So I personally consider the minimum threshold to be around 25 to 30% of institutional ownership. But of course, just like anything in life, there could be many exceptions to that rule. The current short interest is around 17% of the total float, and 57% of the transactions are coming out of the dark pools. If the short interest is above 15% of the total volume, then it may suggest for some institutional positions taken to short the stock, and there could be potential for short squeezes. But again, I'm not overly concerned about this for the time being, just because the overall market sentiment for Mullen is so poor that I don't believe this to happen anytime soon, unfortunately. As things remain now, Mullen is trying to keep itself alive with positive vibes in its announcements and reminders to us that its past purchases are absolutely amazing. They give them, great capacities to produce all sorts of amazing cars, and that it's always possible, don't forget, folks, it's always possible that Mullen will become a major player in the EV sector. But they eventually added right behind Tesla, because he's not going to pretend that he can beat Tesla at his own game. I mean, good for him that he still has some clarity. So he can claim all sorts of things, but at some point, I think that we will also believe what we want to believe in, and the market is no longer willing to follow the good words from the CEO. The fundamentals are truly abysmal. The cash situation is under great duress. The shorts are keep shorting, while the squeezes have yet to show up. It's its continual existence, its solvency, in other words, the going concern for the company, is now being put into question ever since December of last year, which, by the way, triggered a massive avalanche of sell-offs. All these would mean that Mullen has a very limited capacity to self-regenerate and needs external contributions or changes in order to grow. If you have a very high overall exposure in Mullen, it is perhaps time to either stop the purchases or to look for opportunities to reduce your existing position, even if it means to assume some potentially hefty losses, as long as those actions allow you to save something in your portfolio so that you have the capital to deploy for other opportunities. If you have a moderate exposure in Mullen, say below 10% or so of your portfolio, then I would say to exit when you can break even and to ensure, to reduce the exposures in similar positions. Now, if you have an exposure around 1% of your portfolio, then I would suggest you to just stick around with it, right? Because at this point, who cares about that tiny little position in your portfolio? Maybe it's going to bounce back. Maybe it's going to have a major short squeeze. Major changes are always possible. They're not impossible, even with Mullen. So as long as we have a good exposure, which in my opinion should be around 1% or below, then I would say to just keep it would be a good choice. With that being said, I don't recommend to buy Mullen in the current market conditions, mostly because I personally believe that we need a different narrative to be built around the stock in order for it to become even mildly attractive. With that being said, I would recommend to commit between 0.5 to 1% of your portfolio in Mullen or any other similar stocks of the kind. I would also recommend to split the allocation in batches of 10 to 20% at a time over a period of 3 to 6 weeks so that you may purchase more in further retracements.